Nishal Maheshwari joining us today. Nishal, what do you make out of the kind of move that has happened in the PSU banking space? Do you see there's enough room or headroom for these stocks to go ahead in the next couple of days?
Yeah, morning to you and your viewers. I think, yes, there is more space for as far as PSUs are concerned. So what's happening, I think, is there has been a bit of a shift, basically, which we see from the private sector banks to the PSUs. And if you really look at it, a few results which have come out, I think most of them been pretty good. There has been actually some of these have been showing NIM improvements rather than actually compression, which was expected in the current quarter. And valuations are interesting. Most of them are available closer to one-time book or lesser than one-time book. So I think PSU should continue to do well.
And how do you expect the earnings to be? Because we've seen the entire private sector banks coming out with the earnings, which were better than expected from a multiple point of view. But now we have in the next 2 weeks, we'll see public sector banks coming out with their earnings. Do you expect a better performance coming in from them?
Yes, definitely. I think besides, I see that the NIMs have been better than expected. One thing which I see here is basically the asset quality also is being pretty good, basically in this cycle for the PSU banks. And I think that's why it is giving a lot more confidence, especially to the institutional investors, to start looking back again on the PSU side. If you really look at it, I think most of the mutual funds are underweight PSU banks. So I clearly see that there is going to be a slight shift away from the private sector banks to the PSU banks.
Harsh?
Positive. Private banks, PSU banks, all are doing great. PSU banks have already shown great momentum. And in the last 1 month, we've seen, very strong rallies in Canara Bank, PNB, SBI. All of these stocks are doing great. Bank of Baroda. I've been talking about Bank of Baroda, Bank of India, Union Bank, all of these stocks last week. So yes, very positive on them. If we talk very specifically for SBI, SBI, I think the next target would be above 980,000 levels in the medium-term outlook. It has broken out of a huge consolidation in the last couple of years, and this consolidation has broken on the upside. Positive on PSUs. On the private sector banks, I think there are some great plays here, like Axis Bank, ICICI. ICICI has seen some selling pressure, but I think this is a buying opportunity. However, my pick would be HDFC Bank. HDFC Bank has broken out of a great, consolidation on the upside already in a very good momentum. I'll be expecting this stock to do great as well. In the medium-term outlook, I'll not be expecting, in the short term, I'll not be expecting anything. But in the medium-term outlook, I'll be expecting a target of 1150, 1200 levels in HDFC Bank.
So those are some of the stocks that Saumil is liking this morning from the large private sector banking space. And we'll also get Kunal's take on the...
Because I think whatever volumes we were expecting to happen because of this GST thing got postponed. So I think that impact will be seen. I think that is what you guys have been highlighting. But I at least for the next 2 quarters, volumes and sales definitely doing much better than what we've seen in the last few quarters. So I think most of these stocks should be a good trading bet from these levels. Now, if you really look at it on a longer term basis, I think the valuation do not justify to hold FMCGs in your portfolio. On a PEG basis, you got around 10-12% kind of growth and 50 times P's. There is no justification to hold a FMCG stock in the portfolio.
Okay.
How do you look at Dixon, Nishal? There's a downgrade from CLSA as well, which has come in with price target cut to 18,800.
So I do not track Dixon personally, but my thought remains to be at these kind of valuations. Any small mistake, I'm saying not saying mistake, but any small fall in the expectation, I think you are going to see this kind of cuts happening. So these are all very highly priced stocks. Till there is strong growth coming through, I think it makes a lot of sense. Otherwise, how do you justify a stock basically at 100 times plus and with 4-5% kind of EBITDA margins? So there is no room for any mistake. And I think that is what's going to play out. Till there is strong growth coming in, I think these stocks will be there. But I do not see any re-rating happening. There will be only earnings growth basically, which will be driving these stocks now from here.
Samil, your take on the technical chart for Dixon?
For Dixon, absolutely negative on this chart at the moment. It has been in a medium-term uptrend, long-term uptrend, but in the very short term, it has taken resistance at 20-40 daily moving average, forming low top, low bottom formation. A couple of days back, a small, a bearish flag pattern has broken on the downside. Negative in the short term. I'll be expecting this stock to go down till at least 15,600 levels, which is very close to 200 daily moving average. So that would be my target. If it does not sustain at those levels, then the next level would be much deeper, around 13,300. So avoid would be my strategy at this point of time for Dixon, but look for basing out patterns at 15,000 levels or around 13,000 levels, and then probably we can revisit and enter the stock again.
Another stock is Urban Company. Goldman Sachs has began initiation with a neutral rating and target price of 140. Do you have a view on Urban Company?
Urban Company, I don't have, because there is less data on the charts. I won't have very medium term or long term view, but in the very short term, I think the next target would be around 160, 165 levels, which is very close to 200 daily moving average.
View on that?
Sorry, is that for me?
Yeah, Urban Company.
So one upfront disclosure, I own Urban basically in my portfolio. So definitely I would be positive on it. But I think one should wait basically. They have still not come out with their first quarter numbers. And let's see how the whole, what they say about the going in the coming quarters. But one thing is quite clear basically that there is a very long runway for this kind of services companies in the country. And there is hardly any organized competition. I do not see any other large company basically which is doing similar kind of job. So I'm saying that way I think Urban Company has a very long runway. Now the thought remains to be whether they will be able to execute it or not, and execute it at a profitable basis. So I think these are two things one should keep on the watch list. But I think at these prices one should be okay basically buying these stocks.
That's a take on Urban Company, and also Urban Company is now at least profitable. At least in FY25, they had reported a consolidated PAT of 28.6 crores. So one of the new listings that is profitable, and that is not very usual to see when it comes to a startup. But Nishal, your take on the entire Alcobev space, and I'll tell you why I'm particularly asking you this question is because UBL, United Brewery, is going to be a stock and focus today, on the back of Heineken coming out with a slight decline in its quarter 3 2025 numbers, wherein their beer volume has dropped 4.3% with a 2.2% decline in premium beer volume. The company also expects modest volume declines for the rest of the year. But if you take a look at their India commentary, the India organic net revenue also grew in mid-single digit, but beer volume, that also declined by mid-single digit, and they're blaming this entire elongated monsoon period for this decline in beer revenue. For their global parent, they anticipate full-year organic operating profit growth now at the lower end of their guidance at 4 to 8%. Nishal, is this flagging of any caution for the domestic Alcobev space as well?
I don't think so. Basically, you have to understand basically that India is not a very big beer drinking market. Basically, Indians largely drink to get drunk. So that is what that's what the whole market is. So if you really look at it, it's the hard liquor which is sold more, and the bang for the buck is much higher. That's the way the Indian market is. So beer is more of a casual drink. I don't think so, and largely more urban kind of population. So I think it will have its own challenges. But on the broader sense, if I look at it, I think the domestic alcohol beverages companies are doing very well. They have actually captured a lot of market. They understand the local market very well. They have got their own brands which are doing very well. And I think the products are pretty good. So I am not really worried about the alcohol beverage market, especially the hard drinks companies.
Okay. All right. Hold that thought. We'll quickly go across to Kanishka, who's standing by, giving us a sense. Much awaited, or rather much needed close quarter with regard to where defense is concerned. Battle carbines is going to be in focus, which are lightweight weapons that are critical for counter-terror operations and extremely short distance engagements. Contracts have been signed with 2 Indian companies that will initiate production and start delivering the weapons within a year. Kanishka joins in with all of the details on what this could mean with regard to even suppliers and companies to keep in focus. Kanishka.
Bharat Forge is in focus today after reports suggest that the Indian Army has signed a major contract to procure 4.25 lakh close quarter battle carbines from Indian firms. Now, this is a deal worth around 2,770 crore rupees. Under this agreement, Bharat Forge, likely through its subsidiary Kalyani Strategic Systems, will supply 60% of the order. The deliveries, they are expected to begin next year and completed within a 2-year span. Now, the carbines designed by DRDO fall under the government's Buy Indian category, marking a strong push for indigenous defense manufacturing. For Bharat Forge, it's the big positive, boosting its defense portfolio, adding revenue visibility, and also reinforcing its position as a key player in the indigenous weapon systems. Now, this contract is seen as one of the largest indigenously developed small arms, positioning Bharat Forge as a key player in the Army's modernization drive. So yes, Bharat Forge is in focus on the back of this news flow.
Thanks, Kanishka. In fact, Harsh, there's a Defense Acquisition Council meet happening today, which is going to approve buying of rocket launchers for the Army, surface-to-air missiles for the Navy and Air Force, and possibly a 33,000 crore deal for 4 landing platform docks. An amphibious warfare vessel also for the Navy to be discussed in this thing. So it's nearly 50,000 odd crores of order flows which will be approved by the Defense Acquisition Council, and we need to watch out for different stocks like BEL, you have Mazagon, you have Cochin Shipyard. Those are some of the stocks that needs to be watched out for.
Yeah, and we also are playing out a conversation which we've had with Cochin Shipyard today. So stay with us on that one, because that's a very, very interesting conversation to get a sense of how defense is unwinding and how execution could play out over maybe the next 5 to 10 years. Any defense names, Kunal, on your radar?
See, I think there are many of them which are looking attractive. BEL, HL, we've been discussing this on and off. They look fantastic on the charts, leader stocks for the entire defense pack. And now I think I would also believe that the likes of Bharat Dynamics, EML, I think these are the few names which are looking very attractive in terms of risk reward. Because just like what we're discussing, say for example, differentiated sector like private banking names. When you have large cap names which are doing well, it's a matter of time. The mid cap and the private sector banking names, they will also start to look attractive. And when they play a catch up, you will see a 10-15% move. I expect the same for many of these mid cap or the tier 2 defense names. Mazagon Dock, Cochin Shipyard, GRSC, they've been underperforming for a prolonged period of time. And you can't have a point or a zone where BEL and HL are coming back to lifetime high levels and all of these stocks remain as underperformers. So there has to be a strong catch-up trade there.
So strong catch-up trade likely at play. Nishal, do you have a view? You've been cautious with regard to some of the stocks which have slightly elevated PE valuations, but talk to us about defense. Is that where visibility is stronger just because your book to bill is 5 times plus in most cases?
Yeah, I agree with you basically, but that has been a historical thing basically. They always, if you look at it, a few of the older companies, BEL has been around for almost, I think now 20 years listing history, and it always has this kind of order book. But the execution and the growth has never been more than 10-15% in a year for them. So yes, it's a good compounding stories where you can say 10-15% kind of growth. But there is never been a case where BEL has grown 50% in a year because it has got 4-time, 5-time book. So I think that's the way basically you have to look at it. market is being unnecessarily being exuberant about these companies, giving them 100 times kind of multiples, but they have got their own challenges because these are all orders for 10 years, 15 years and all that, and in between something happens, the priority goes somewhere else. So I'm saying this orders which you are seeing now of 1 lakh crore, which the government has said the fast track orders, I don't think so. There is going to be an increased allocation from the budget. This is going to be cut away from somewhere and is going to be given because this is what is needed at the moment. So that's the way you have to understand this industry. So wherever these stocks are overly priced, I think it's best to avoid them. There's no need for being in a hurry because I think you will keep on getting these kind of drawdowns and wait for your price.
So that's the take coming in on defense. And in fact, let's listen to one more prominent voice on the entire defense space. Over the course of the festive period, we caught up with Hiren Ved, Director and Chief Investment Officer at Alchemy Capital Management, and he is bullish on the defense.
Has also shown a great momentum. So Bank of Baroda would be my top pick from the PSU banks. Union Bank is looking great as well, but Bank of Baroda stop loss would be 262. And targets I'll be expecting at least 280, 285 levels. So Bank of Baroda and Union Bank would be my top picks from PSU banking.
Okay, and Kunal, what about you from the mid-cap end of the market?
So I'll go with one Hindustan Copper. I think that's a stock which has done exceptionally well. Even at current levels, the stock is poised for a further continuation of move. It's managed to close above the 330, 340 barrier. So we'll look out for 370 as a target for Hindustan Copper and stop us at 330.
Nishal, we've spoken about so many themes today, but tell us what is standing out for you in the market. How would you play it at this point? Is there a sector stock? Is there a pick which is really standing out both in terms of risk reward? Because surely we are expected to see a gap up on the Nifty 50 and with all of the positive commentary that's coming through, you could likely see a week or two of good zing on markets. So give us a sense on what is it that you're seeing value in at this point?
So I would actually say, I don't know where something is going to happen today, but there are two themes which should play out in the short term. One is the interest rate cut scenario, basically. There's most likely going to be a rate cut happening in December. RBI has cut interest rate 100 basis points upfront. So interest rate sensitive sectors, whether it is banking, whether it is autos, whether it is other consumption things, basically, I think real estate, I think these are the themes one should be doing well in the next 1 or 2 quarters. Similarly, if you really look at it, the focus is on consumption. Government wants to push consumption. Various measures have been taken, GST, then the personal tax cuts. So I think that's the other theme. Now, how do you want to play that? I think these are the two themes basically which are looking very, very strong in the next 1 or 2 quarters. All other themes have been playing out or have already played out, whether it is defense, whether it is capital goods. I think they have already played out to a good extent. Have they ended? No, but they have. I think there is still a long way to go for them. But for the next 1 or 2 quarters, I would actually play these two themes.
These are the themes that are looking good to Nishal. Nishal, thanks so much for your time this morning and appreciate you joining us. Well, 26,000 in the pre-open is something that the Nifty has hit right now. A 0.6% uptick is where we're poised to open, but it's still early minutes in the pre-open. We'll give those rates some time to settle. But meanwhile, you have gold and silver. Both have seen another 1% uptick on the MCX.